Futu is a Hong Kong-based stock trading app similar to Robinhood.
Yeah.
That allows, mostly millennials throughout Asia to, access, the equity markets, options markets, etc. So it looked like the company. Last year Futu put up 214% growth. This year it looks like they should do at least 120% growth, maybe more than that. They recently did a secondary, raised about $1.3 billion, which will allow them to expand some of their offerings, offer additional margin to their customers. And if people are on more margin, it allows them to increase their trading activities, which brings in more revenues for Futu and actually increases their margins. So I think people are, the stock got hammered on the secondary offering, but I think for people that have a longer term mindset, they realize that, that money is not being raised because the company is burning through it. This isn't one of these like small cap, high growth, unprofitable businesses that's just burning cash every month on operations. Futu already had 58% EBITDA margins and 48% net income margins, already very, very profitable with cash on the balance sheet. This money being raised is going to fuel their growth. It's not getting lit on fire like a lot of other companies are doing with it. So I think people misunderstood the reason for the raise. I didn't love it either, but I understand it. A company that is growing at 120% with 50% net income margins. Like 50 times earnings that's too cheap. You have Apple trading at 30 times earnings, growing at 10%, right? So there's no, so the whole, PE
multiple is already making money. Are they profitable?
Oh yeah. Yep. No, they're very profitable. 48% net income margins. And that's before they did the secondary offering, like I said, which could increase the margin. So, like Nvidia is probably trading at 50 times earnings and they're not growing at 120%. So it's just, it's so hard to find like you can't use any large cap comps for Futu. I think whenever we get the Robinhood IPO, Robinhood might actually be a decent comp for Futu. And I think, based on what I've heard from people, the Robinhood numbers are going to look really good, but I don't think Robinhood has 50% net income margins. So once we see those Robinhood numbers, whenever they drop their S1, I think it's going to make Futu look even more undervalued. It's possible that Robinhood is growing that fast, but they're also probably spending a ton of money. They're not nearly as capital efficient as Futu is. Nobody is. So it's hard to come up with a valuation. Let me just pull up the numbers real. So I know, the analysts on Futu are like anywhere from 900 million to 1.2 billion for this year. Consensus is right around, what's consensus now? About 940. If once again, if the, I don't have the numbers. I don't have my model in front of me, but I think Futu is easily a $30 billion company right now. So when people ask me where do you think Futu is going, and I say I think it's going to at least 200 by the end of this year, maybe closer to 250. That's kind of how I get there. Right now the stock's trading at 145, and it's a $20 billion company. So if you just multiply that by 1.5, so 220. So, if the market cap went up to 30 billion, you'd have about a $220 stock. And that even sounds light. So Futu expected earnings this year of about 450 million. So at 30 billion. So at 30 billion, the stock could be trading at 66 times earnings. That's not unreasonable.
That's okay.
For a stock that's growing top line revenues at over 120%, 60 times earnings for a company with those sorts of metrics is not unreasonable. Like I said, you probably have some large cap. Let's take CrowdStrike. CrowdStrike, for instance.
Yeah.
I mean, I love CrowdStrike. I think it's a phenomenal company, but CrowdStrike is probably trading at, I'm just off the top of my head, 35 times sales.
Around there, yeah, because I have holdings, yeah.
Yeah, 35 times sales, or maybe even it's
Mm.
30 times sales now with 45% growth and unprofitable. Like, that's times sales, you know, I'm talking times earnings on Futu. I mean, if Futu does $1 billion in revenue this year, right now they're trading at 20 times sales. So like, I mean, I know these are completely different industries, but would you rather pay 20 times sales for a company that's growing at 120% with almost 50% net income margins? Or would you rather pay 20 times sales for a company growing at 30% and still losing money? Like, so when people ask
Makes
me,
sense.
you know, why Futu is one of my largest positions, that's why. I mean, the numbers are just insane.